Good morning, everyone, and welcome to the 6th episode of RK Leadership. And our goal is to create tomorrow's leaders through sharing of knowledge, experience, and inspirational stories. And with that said, my guest today is Nadeem Mian, who is from Sharia law. I will let him introduce himself to you guys and walk us through his journey. So before doing that, I just wanted to thank you very much, Nadim, for taking the time to be with me today and doing this video for everyone. So welcome, and please, the floor is all yours.
Sure. Thanks, Rob. Thanks for having me here. So my name is Nadeem Mian. I'm the portfolio manager for Sharia-compliant Canada. We're a full-service wealth management firm, portfolio management firm based out of Oakville, Ontario. What we do basically is that our goal as a company, our mission statement, if you want to call it, is to help Muslim Canadians reach their financial goals, but make sure that they're not compromising their religious values. Sharia investing or Islamic investing is something that over the past several years has started to grow quite substantially, not just in Canada, but more so on a global level. And my role as a portfolio manager is I manage the firm's model portfolios. At the same time, I do a lot of the financial advising, in terms of helping clients when it comes to their wealth and their investments.
Awesome. That's great. And I'm sure there's going to be a lot of questions that'll come your way afterwards. So Nadeem, can you walk us through your journey in terms of how you got started into getting into finance to begin with, and your journey into how you got to Sharia law today?
Sure.
Sorry, Sharia portfolio.
Sure. So my journey into this investment space started, I guess, way back around grade 8, where as a kid, I used to collect a lot of sports cars. I'm a big sports fan. I was just really fascinated when you're buying a card and based on the success or failure of that player, you can see the value of that card grow higher. So that really kind of stuck with me. It was like my hobby growing up as a kid. And then one day, my uncle brought this Wall Street movie, and I watched it. And at that point, I connected the two. I connected my passion for sports cards and stocks. And I knew I wasn't going to be a pro athlete. Just didn't have the DNA or the makeup for that. But so I said that this is what I want to do, and pretty much I was really focused on that. And I think my uncle played a big part in my mindset in terms of he had this. At a very early age, he used to put on these Tony Robbins cassettes and that whole Zig Ziglar motivational stuff. And, it just kind of stuck with me that, like if this is what you want, this is what you can get. Like it's up to you. And, I didn't really come from I came from a single mom, raised me, and we were kind of, low to middle income, right, in terms of where we were. So it wasn't something that this wasn't something that it was a given exposure to me. It was something that, was instilled in me. And then at the same time, I wanted to do something that I liked. And so I did that. And then, kind of went through the process, did my undergrad in Montreal at Concordia University. And, in my high school yearbook, I actually wrote down, they have this column, probable destination.
Nice.
And I said, to be a broker on Wall Street. And that's what happened. I after my undergrad, I pretty much went to New York and started working for a firm down there.
Awesome. So manifestation does work. So it's interesting. You talked about mindset, and that's something I speak a lot to with my audience. What did you try to instill in your mindset, and how were you able to exercise that in your mind when from high school to your first job?
I think, sometimes it's just about being hungry, right? And just trying to have that motivation to to get out of the situation that you're in, right? As I mentioned, I came from my parents are divorced. I had a single mom, immigrant mom. Worked hard, and I used to see success, and I think that's the other thing is that within all those whole Tony Robbins stuff, right? You see the videos, and back then it was you could say it was a little more cheesier back then with the yachts and the cars and everything. But when you see that, you kind of start to manifest and say, I want that, and I don't want to be in this situation, and I'm tired of being in this situation, even at a young age. So for me, I felt that there was a hunger within me where I felt that this goal is going to help me get out of the situation that I'm in, and at the same time help me get some of the stuff that I want in life.
Awesome. No, that's great. And again, mindset is super important. And I think, part of that manifestation is creating those thoughts in your head that it could become reality. It's just how much you focus on it and your commitment, like you said, staying hungry. I know you've got a lot of great stories that you want to share, and I'll maybe start off here. Can you share the story about your boiler room job in New York?
Yeah, sure. So as I mentioned, I grew up in Montreal. I'm Canadian. My dad did live in New York, but I didn't have any status in the U.S., so to speak, right? But so when I went down there, I did go around interviewing at various firms, and for the most part, the issue that I used to run into was, well, we only hire U.S. green card holders and U.S. citizens, so we can't. So I used to get like all the big firms, like the Merrill Lynch's and the Morgan Stanleys, right? For the position that I was looking for, they weren't accepting me. So I ended up, at a firm where they're like, what, we'll let this slide. We'll help you out here. Right? What do you need, right? And at that point, I just needed a work visa, really, right? So the firm that I worked with, they were willing to do that, and I was able to kind of cut some corners and figure out how they can do it. So they did it, and now when you're working for a firm like that, it was a boiler room, I guess, if you want to call it that. My first manager was the apprentice of the famous Jordan Belfort from The Wolf of Wall Street.
Oh, nice.
Yeah. So at that, and I was young out of school. For me, it was just about working on Wall Street, getting licensed, and just kind of manifesting that dream, right? They just living out the dream. So when you're young, did a lot of cold calling. It was a pretty crazy environment, but the good thing for me was I did want to get licensed, and then you kind of learn fast that this looks like a pretty okay gig, but long term I knew that this wasn't the destination that I was going to make my career in. But what it did for me, however, working in that boiler room was, Montreal's a pretty laid back city, and I was somewhat of a laid back guy. And coming into an environment like New York City, Wall Street, boiler room, it really kind of, told you, listen, you got to fight or flight here. And that whole laid back mentality was just out the door. And the if one thing it did, that boiler room, it did kind of, made you sharp. It developed strong communication and sales skills. And so, but most importantly, it did change the mindset in terms of how you communicate through people. And at the same time, it also changed who you thought you were as an individual, right? So I think, although I probably only spent maybe about 7 months there, it was just over half a year, but under a year. It did instill in me like just a different mentality to more of an attack, right? So I did that, and then subsequently I went to a reputable firm where I started to build my business in basically from 1998 to about 2002.
Nice. So again, you talk about the change from going from being a very calm and collected person to now, you have to be aggressive in terms of working in an environment like that. How do you make the adjustment, and what did you need to do again in terms of yourself to make those adjustments to kind of fit in with that environment?
Yeah. Well, for me, right, I felt that sometimes, I left Montreal behind. I left my family, I left my friends, and I went to New York. And sometimes it's that whole, like Larry Bird, I think said, it's a fear of failure, right? Mm-hmm. And the last thing that I wanted to do was go back to Montreal and people are going to look at him and say, well, I guess it didn't work out for him, right? So for me, I was truly like, look, you know what, this thing's going to work. And whatever needed to be done, needed to be done. Now, I will say this though, that, being in that position, I was really determined to succeed in my position. So I have a funny story for you, right? So my job at that time, right, was to, I worked for a senior broker there, and the job was, he gave me a list and he was targeting doctors, and my job was to call these doctors and get through and find out their information and find out, how much they were invested, et cetera, et cetera. Now, back in those days, the toughest thing to do is get through a doctor in the middle of a day.
Yes.
So what, we came with something like 20, there were 20 kids from university, just like myself, and they just lined us up and said, everyone call, right? And it was the same thing. You make 100 calls, you might connect maybe with 5 or 10 doctors, right? It was like a 10% maybe hit rate. And once you got that doctor, it was no given that he was going to listen to you. You could probably go to hung up the phone.
That's right.
So after a couple of weeks, I told my boss, I go, how do you dig up these doctors? He goes, well, do we just dig them up by last name? I go, well, why don't you do this, right? So my background is I am, Pakistani and I speak the language. And I told him, I go, listen, I want you to I gave him the most common Pakistanis and Indian names. So I gave him, and I said, what, give me all the doctors with this last name and I'm going to call them. And I used whatever tools I had, whether it was my name, whether it was the language. And funny thing is, like, my success rate getting through these doctors just went off their charts. Like, everybody in the office, like, what's this guy doing? Right. And it was funny because when I would call these doctors and I would use my name, or sometimes I would use, like, for example, for an Indian, I might use an Indian name. For Pakistanis, I might use Pakistani names. For an Arab, maybe an Arab name, whatever, right? The doctors would literally think, wait a sec, do I know this guy? And he would come on the phone. So, it's just, it was just one of those things that I think, that kind of got the ball rolling for me. I know it's a little bit of success. It's like, what would it, it's like, you didn't like hit $1 million or anything. I didn't. But at that age, once you figure something out that's working for you, I just kept on building.
That's right.
Yeah.
And that's how you become creative, and you try different things, but it's always about connecting with people emotionally, right? People are emotional beings, and when you can connect to them at that level, that's how your success, you become successful. So I know a lot of people watch a lot of these movies, like The Wolf on Wall Street, and there's been other movies that have been made. I want you to talk to us about the environment that we see in the movies.
Yeah.
Which it's like a very busy call center. People are going crazy, yelling at each other, versus what you experience in real life. How is that the same or different?
Yeah, I mean, obviously a lot has changed today, but back then, Hollywood does put a little bit of more, exaggeration. But I would say that it wasn't like the core things in the movie were pretty much the same, in the sense that, you were on the phone, you were, calling these people, you would have your rebuttals ready, it was smile and dial, you would ask for the order over the phone, and people would send money over the phone and open accounts. It truly is, if you think about it conceptually, right? It's probably one of the most toughest jobs in the world. Again, I know we live in a different time today, but if you can imagine you getting a phone call right now, and that guy on the phone is trying to he's not going to sell you something like tires and you're going to get them in the, tomorrow. It's not a physical thing that you're going to see. Like, I see this. He's, that person is selling you an idea, a concept. And, to get on that phone and ask for them, hey, you don't know me, but I guess I have something for you, and write this down, and bang, bang, bang. That's what we did. And I would call people, and I would say, doctor, this is Nadim. We spoke. I want you to grab a pen, write this down, and I would just go into my pitch. And so, asking somebody to send you, at that time, whatever, it was asking for 10, 20 grand in an idea.
That's right.
For the first idea. It's tough to do, but yeah, we used to do things like that. Now, mind you, that was the boiler room, and it was a little bit of there was a little bit of a college frat type of environment. It wasn't as bad as I think, at least that's not what I've been exposed to. Maybe it was happening, but not in front of me. But there was a little bit of a lot of testosterone, just aggressiveness, in that environment, and
frat house,
kind of a frat house, yeah.
Awesome. So you talked about having to work in New York, and now you've been in Toronto. What have been like some of the major differences between New York versus Toronto, again, in terms of the environment, people, and just like the speed of the work, or the pace of the environments?
Yeah. So when I made the move from Toronto to New York, it was quite a bit of a culture shock, because I did go from a very busy, fast pace to something that was a little bit slower, right? And I think there's a historian that once said that Toronto is like New York, but run by the Swiss. I don't know if you ever heard that, but it is, in the sense that the Swiss, they're much more calm, or whatever, right? So Toronto obviously is a big city. It's a financial hub of Canada. So it has all those common elements of New York, but the difference is that, it is much more cutthroat and competitive in New York than it is in Toronto. It's different. I think we as Canadians versus Americans, we see it not just in the workplace, but just even around us. Like they have the melting pot, we have the mosaic, and I felt that when I came here, Americans are different, and I think what I was sometimes the approach, the tactics I was using in the U.S. weren't going to necessarily work here, because that's just what it is. I think as Americans are more used to something in terms of their culture and the way they do business versus, how we do it.
That's right.
So, coming to Toronto, I thought I could, use the same approach, which to some extent I did, but I realized kind of quickly that, you're going to have to change it up a little bit, because the folks here, what you're doing might not, work with them, right? So yeah, I had to change it up a little bit.
Awesome. That's great. And did you find that it's easier to make a sale out in the States because the population's greater, and I guess in terms of wealth, there's greater numbers there than in Toronto, or is it about the same?
You know what? I mean, at the end of the day, of course, it's a bigger market, but at the same time, there's more competition. So I do think that, sometimes things just kind of, play out, right? So from that standpoint, I would say, there's much bigger, numbers and opportunity there. But that's not to say that you can't do it here as well. I think the difference really is that when it comes to closing, when it comes to that business mentality in the U.S. is a little bit, it's much more, okay, what do you got for me? Let's go, right? Whereas over here, it is a little bit more laid back and kind of like, okay, you know, let's take our time here and don't. Yeah, what do you mean? You're getting a little too aggressive with me, right? And then they find like sometimes that can come off very negative. I find America. See, the thing with the U.S. is that everything's there, right? Like you if you wanted to ski, there's a place to go. If you wanted to go on a tropical beach, you can do that. And you know, you don't really have to leave your borders, right? For you,
That's right.
And that's the same thing when it comes to investing, though. For them, when it comes to investing, you know, they don't really have to go internationally because everything is pretty much there. Whereas here as Canadians, when it comes from an investment standpoint, I think as an investor, you have to go outside of Canada because the investment opportunities here are limited. But I think that actually helped me in the sense that when I came here, you know, the Canadian investors that I was speaking to, for the most part, they were typical overinvested into Canada, you know, Canadian stocks, mostly a few Americans, and off you go, right? But where I came from in the U.S., at least, you know, I never viewed it like that. It was more kind of like, you got technology, you got healthcare, you got this, you got this, you got this, and you could all do it in the U.S. And so I think that actually helped me, right? There were certain things that kind of hurt me coming here, but I think what helped me was, you know, speaking to some of these Canadian investors, they were really used to, you know, a guy, you know, talking to them about, you know, being underinvested in Canada and focusing more outside of Canada.
That's right.
Yeah. I know, obviously things have changed now, but back then it was very, you know, they had, for example, like on RSP accounts, they had restriction rules. You couldn't even invest over 30%. You know, like 70% had to be in Canada, basically, right? Canadian stocks, and only 30% was a max. They obviously got rid of that rule, but that was the environment that I was in, basically.
Interesting. And that does make it a lot tougher too, right?
Yeah.
Before we leave your journey of leaving New York and fully establishing in Toronto, I know that we talked about this in the past as well, and you've been part of, you know, history, the dark part of history in terms of being in New York when 9/11 happened. So I want you to talk to us about your experience in terms of, and you were very close to those towers as well. Talk to us about your experience and what went through your mind, and pretty much that day in you know, summarize that day.
Yeah, sure, absolutely. I mean, and before I summarize that day, I think I mentioned this to you, is that you know, when I was getting turned down, right, and I was going to these interviews with the big firms like Morgan Stanley and so forth. You know, one of the interviews was in the Trade Center with a big Wall Street firm. And, you know, at that time, the hiring manager was like, listen, we like you, but you know what, for this position, you need a green card. You know, we don't hire non-resident U.S. So, you know, I didn't get that job, but that was a blessing in disguise.
Thank God.
You know, where I ended up working was literally 2 blocks south of the trade centers. And over there, on that day, I still remember it like it was yesterday. We had a sales conference the 2 days after, on September the 13th. So we were in a conference room and we were just talking about, okay, guys, we're going to have our sales conference in Tampa. We're going to fly out, blah, blah, blah. And then, you know, while we're there, we just, you know, literally just see smoke coming out of the first tower. But, you know, we were on the south side, the plane came to the north. So we didn't really know, you know, we didn't really see anything. Then we saw the news reports of the Pentagon being on fire. And again, we were thinking, okay, well, this is kind of odd. And then, yeah, you know, stuff got real when the second plane was coming right kind of, you know, at us almost. And so that ball of flame, I still remember, it was kind of directed towards us. So that's how close we were. And then at that point, of course, we knew that, you know, this is serious and something's going on here. And, you know, it was surreal. It was almost like you're in a movie. Like, if you can imagine, you're just, you know, you see these buildings and they're just like, you know, staples there. You see them, and then all of a sudden you see planes going in them. It was just so surreal. And you know, I had people, you know, my family and friends from Canada were calling me saying, "You're all right, this, that." I was on the phone at that point. I was on the phone with my cousin from Toronto, and you know, he's asking me what's going on, and then this is when the first building came down. I just felt like an earthquake, buildings coming down, and I'm like, oh shit, I gotta go. And the line gets cut. I didn't even tell my cousin what happened. And the line got cut, building came down, and at that point, we're like, we got to get out of here, because the second building was actually a little bit closer to us. Made my way down. At this point, everything's just in the dark. Nobody has any communication. But I was on the second floor of our building, and all of a sudden, there's reports going out that there's a plane that's headed to the stock exchange, and the stock exchange was actually closer to us than the trade towers. So I said, you know what, I got to get out of here. And ultimately, just took off my shirt, wet it, put it on my face, and just started walking to Brooklyn. And that's where my apartment was, and finally made my way out. But the whole event itself was like obviously pretty traumatizing. My colleague who sat right behind me, he lost his brother, and I knew he lost him at that moment.
Wow.
And then I think at that point, I love New York. I always tell this to my kids and my wife, is that if 9/11 never happened, it probably wouldn't have been there. Because coming back to Canada, I think a lot of it had to do with personal, just the fact that the environment had changed, the atmosphere had changed. Of course, my family, was relieved that I was, I made it through this. But they were really telling me to kind of come back, and then I had an opportunity in Toronto to kind of reset myself.
No, that's and that's truly, it's a sad story, but the silver lining, I guess, it's that you did get out of it. You didn't get that job that you applied for in the World Trade Center, which was a blessing in the sky, and that's something that people need to understand, that sometimes things do happen for a reason, and you can't fight it. You just gotta know that there's either something better for you, or there's a reason that something happens. And the other thing with respect to that is just gratitude, being grateful to be alive every day, because you absolutely don't know what tomorrow has in store for you, and reaching out to those who you love and letting them know that you care for them on a regular basis, not just when something happens, because again, you don't know what tomorrow has in store.
That's true.
So that's a great story, and thanks for sharing that. And I know, it opens some old wounds, but I think it's great for people to kind of resonate with stories like this. So let's get back into the real part of this podcast, and from the investing and the portfolio management aspect. So Nadeem, can you talk to us about some key aspects to understand when it comes to investing? What should people know, and what do they need to be educated on, and how do you help them figure certain things out?
Sure. With specifically about Sharia-compliant investing, or just investing?
Investing in general.
Okay. Well, I mean, investing in general, I think, depending on who you speak to, like there's some, families that have been doing it for generations, and they understand this. And then you have those people that haven't, especially like new immigrants, for example, right? Who are really, up to speed when it comes to these types of intangible assets, right? But, at the end of the day, I think, the investing is all about, compounding growth and growing your wealth, right? It's about, fulfilling those objectives, be it retirement, be it, saving for education, or any other long-term objective that you have, right? And of course, now we're in an environment where inflation is a thing. So, investing is now more important than ever. Now, what we do as a portfolio management firm and as wealth advisors is that our job is to obviously listen to our clients, figure out, what's most important to them, try to understand as far as, what type of return and what type of risk profile they fall under in terms of do they have the ability and the willingness to take risk or no, right? And what's their tolerance level on that? And based on that, then, our job is to, give that prescription to our clients and say, this is what we think, and this is, what you can do. So we don't we don't have one size shoe fits all. We have conservative clients, older, all the way up till aggressive. And based on that, my role obviously is to manage those portfolios.
Awesome. So, and typically when, younger people want to invest, I, for one, didn't know a lot about investment. It was nothing that it really interests me. But if somebody wants to get into it and they don't have a lot of money to start off, first of all, how much is a minimum required to work with somebody like yourself in terms of, managing that portfolio, and how can they get started?
Sure. I mean, when you're young, I think first of all, the most important thing to do is just to save, right? I mean, especially if you're like 24, 25 years old, right? The biggest thing that you should be doing is just save, right? And maybe I would say don't make your first experience your last experience. Now, what I mean by that is, a lot of times, just because you're young, you might have the willingness and the ability to take risk. But what ends up sometimes happening is your first experience turns very sour, and then all of a sudden, it just snowballs into, bad experiences going forward, right? So I think, it's like building a house, right? You need to, number one, build a core.
Yeah.
Now, personally, at this point, I manage my minimum, for my clients is 100,000. Now our firm does take amounts lower than that. We do have advisors that, can help with that. Because when we first got registered, our goal was not to turn anybody away, because what we were offering was something very specific. And in some cases, a lot of our community was thankful that we were offering this product because none of the big banks were offering it.
That's right.
And so we felt there was some type of fiduciary duty, to our community to say, you just had a child, you might want to put a couple thousand into their education plan. We're not going to say no to you just because you don't have 100,000. So we were able to kind of, bring those clients on. And sometimes I think that's the best thing is that, when you start off and even at that amount, your first experience, it won't be your last. And then if you can just simply see the compound growth that's happening, then as our clients' finances get better and they're able to invest more, then you see the benefits of that, right? So I think, for us, like I said, our minimum is 100,000 for our active managed portfolios, but we do have a solution for clients that are looking to start at a lower level, and especially new clients, I would say, new younger clients.
Nice. And again, these investments are all long-term and it's for the longer game. What are your typical returns on these investments?
Sure. So, and let me just backtrack here, right? So in our portfolios, especially for our smaller clients and the new clients, we use exchange traded funds, ETFs, to build those portfolios. And we have an equity ETF, we have a fixed income ETF that is Sharia-compliant, and we have a real estate ETF that we currently use to manage that. When it comes to our actively managed portfolios, we're doing a combination of two, where we are using some of the ETFs, the same ones that we use for the passive, but we're obviously complementing that with active stock picking, right? So
in terms of the returns,
the returns, yes. So in terms of the returns, and again, I'm going to maybe backtrack a little bit on this, right? Is that if you take a look at the returns of the S&P 500 over the last, say, 90 years, I believe the number is about 9.9%, right? That's the average annual rate of return on the S&P. Now, I believe for the last 10 years, I could be off by a decimal here or there, but the S&P over the last 10 years has averaged about 10.5, 10.6%. Now, our style of investing, which is Sharia style of investing, right? The S&P 500 Sharia index, which is basically applying the Sharia screens that we use onto the index, that index has actually outperformed the S&P 500 by 1.6% over the past 10 years per annum.
Nice.
So, I mean, what I'm basically trying to say is that, yeah, we to kind of use a little bit of an apples to apples comparison, because what we basically do is if you take the S&P 500 and you apply the Sharia standards onto it, it kind of, filters out those stocks that don't meet the standard, and then you're left with whatever is compliant. So, that has up from now. In terms of our portfolio, it does vary because, like I said, we have different types of portfolios. But, just to kind of give you an idea, our moderate portfolio, which is kind of the middle of the road, over the past, because we got registered in Canada in January of 2020. So our 3-year number on the moderate is about, it's about 8.59%. It's in that. And whereas the benchmark, our expected rate of return that we try to tell clients, what to expect in terms of long-term annual average is about 7.5. And the benchmark is actually, over the past 3 years, has done less than that. So we've actually outperformed the benchmark, and we've actually outperformed even our own expected rate of return, or at least over the past 3 years.
Nice.
That doesn't guarantee future, but I think we're off to a pretty good start.
You're on the right track.
Yeah.
Okay.
Yeah.
Awesome. And I do want you to, talk to us about the Sharia investment and the concept behind it. And for those who don't know how this came about, I'll let Nadeem kind of explain it. But the basic concept is that in Islam, you're not allowed to make interest. And correct me if I'm wrong.
Yeah.
Right? So the purpose behind this is to kind of, I guess this is okay versus not. And I want you to explain that because I don't understand the concept that well.
For both Muslim and non-Muslim, viewers, right? Maybe the term ESG or SRI, which is called, SRI stands for socially responsible investing, and ESG is for environmental, social, good governance, right? Now, this type of investing, right? This is mainstream. It's out there on Wall Street, on Bay Street, everywhere. A lot of the funds will implement this. Now, what the concept really is, as it says, socially responsible investing, meaning to say, when you're investing your money, you want to make sure that you're buying companies that are in good industries, that are good corporate citizens, et cetera, right? Now, Sharia style of investing, halal investing, the CFA Institute kind of classifies this as a subset of this bigger bubble here, right? So fundamentally, really what it is, it's whether you're Muslim or you're not Muslim, is that, you're investing your money according to what you believe in or what you don't believe, right? You're restricting yourself, right? So whether you are a Muslim that doesn't want their money to be allocated, for example, in alcohol stocks or in interest, right? Or whether you're, just somebody who, for whatever reason, decides, I don't want my money to be invested into fossil fuel companies because I think it's bad for the environment, right? It's about, it might not be faith-based investing, but you're implementing your beliefs.
That's right.
Into your money. And so we are doing that. Now, when it comes to the Sharia style of investing, yes, number one, we don't, it doesn't involve any interest. So GICs, bonds, we don't invest into that. And a funny thing about that, believe it or not, all three faiths initially prohibited interest. Yeah, Islam just stuck to it.
That's right.
Right. But anyways, so that's a side note. But and of course, when it comes to equities, when we're investing into stocks, yes, we're not investing into the whatever's not permitted in Islam. So that means alcohol, tobacco, casinos, any adult entertainment, et cetera, et cetera.
That's right.
Sin-related sectors. Now, the Sharia style, the good thing is over the past several years, it's advanced quite a bit, especially in the Gulf countries where there's been a lot of advancements with Islamic banks and whatever. So there now is a standard, and then this standard has kind of been set by a council in the Gulf. They've written what I call the Islamic rule book on finance, and they've given us guidelines as far as when it comes to investments, what is deemed to be permissible and what is not.
Mm-hmm.
And so what we simply do is we just apply the rule book into our practice. It's no different than if you had a portfolio manager who had his model, his metrics, and say, you know what, I'm only going to invest into these companies that fit this model. Our model, yes, we don't invest into companies that are, buying too much. To be more specific, actually, it's not just the eye test. Like, okay, we're not buying shares of Budweiser. We get that. But to give you an example, even Walmart is not compliant because Walmart fails the halal test because more than 5% of their income is coming from, non-permissible sources. They're actually one of the largest sellers of weapons in the U.S. Yeah, that's why they failed. That's one of the reasons why they fail, I guess. But, that's kind of point one, is that no more than 5% can come from, non-permissible sources. The other two are basically some financial ratios that are centered around interest. So number two would be the debt to market cap has to be less than 30%. And also the other way around, in the sense that when it comes to the interest-bearing investments they have on the balance sheet, it has to be less than 30% of their assets. So fundamentally, yes, we're not buying over-leveraged companies that are using too much debt to do business, and vice versa, companies that are relying too much on interest as a source of income or to shore up their balance sheet, right? And I think especially in this environment that we're in right now, I think the Sharia style is, whether you're Muslim or non-Muslim, interest rates and inflation is a thing. And if you're a company that, relies on debt to be profitable and to be efficient, and now the cost of debt has gone higher, those companies are going to get hit. And, we're starting to see that, yeah.
It's a lot riskier, for sure. So, and that's really interesting. And another thing we did talk about is, in terms of stocks in generals in these portfolios, there's been a new transition now where, people are starting to invest internationally, whereas, the States has got the technology and a lot of, good names out there, but there has been a slight shift now to the international market. Can you give us your opinion on what's going on over there, and is that a good thing or a bad thing? Where do you see that in the near future?
Yeah, no, I think that's a great question, and we're living in very interesting times right now. The U.S. stock market is still the largest stock market in the world, and as you mentioned, technology, healthcare, they have all the great sectors out there. But we are starting to see the playing field get a little bit more leveled out. You have Asia and China and India, some of these countries that are emerging. The demographics are emerging in the sense that there's been this urbanization. They've been China's gone through it. I think you're starting to see that in India as well.
That's right.
And so, you have this urbanization going on, and that's creating consumer spending. That's creating, all sorts of things, right? At the same time, like, the world is also becoming, I think, a little bit more deglobalized, where, I think, previously in the 10 years before, you had this globalization, just send me the stuff from China and everything was hunky-dory. And now we're starting to see a little bit, I'm seeing a change in terms of, pockets, right? Where, you're hearing a lot of chatter now that manufacturing jobs have to kind of come back to North America.
That's right, yeah.
So maybe COVID gave us a reason to do it because of some of the supply issues, but it's also political as well. We're starting to see some political, divisions and things going on that now are causing deglobalization. So, as an investor, I think you have to acknowledge that, but at the same time, maybe even take an opportunity on that. And so there has to be this kind of balancing out. And I do think that you're going to see, other countries start to kind of crop up. And as an investor, I think it's important, for clients to be more exposed to those areas of the market now.
And keep an open mind as well.
Absolutely, yeah.
Okay, awesome. So Nadeem, I bet when, you're out and about, with your family or friends, you probably get this question asked a lot. Hey, Nadeem, what's a good stock to buy?
Yeah.
I know I ask you that question all the time too when I see you.
Yeah.
How do you answer a question like that? And what do you do outside of your own portfolio? How do you investigate what's a good investment in terms of a stock?
Well, I mean, asking what's the favorite, it's like, asking who's your favorite kid, right? If you have more than one kid, it's like, I don't know. Because at the end of the day, yeah, you put them in your portfolio because you like them. So that's always a tough question to answer, and I'm probably not going to answer that. But what I will say is that, how do we go through the process of selecting? I mean, first of all, it's not just myself. I have colleagues, as a part of the portfolio management team. My colleague in the U.S., they run the U.S. portfolios, and at the same time, my colleague here in Toronto, he's our compliance officer, but he's, managed money for a Canadian pension fund at one point in his life. So, as a team, we do cross-pollinate a lot of discussion on the markets and the idea, but overall, in general, we do use a top-down approach. And what top-down simply means is that we do look at, the overall economy, and then get to the sector, and then identify, once you kind of have an assessment on the overall economy, then you can start to kind of decipher and say, okay, well, based on this, what sectors do we think will do well, right? And then you kind of isolate that, and then from the sector, then you can kind of go even further down and say, okay, well, if we're bullish on this sector, how do we pick the best of the breed in this sector? So those are just some of the things that we look at from a top down. We also use a bottom up as well. Bottom up sometimes just simply means that, you're going to, in some cases, and where you just drown out the macro stuff, and you just look at the company individually and say, okay, is this company, can it just operate in a vacuum and have success, right? I guess the best example for that might be Tesla, maybe, where they had something. They were first to the market. They had something that maybe nobody else was doing at the scale that they were doing. And I'm not talking about now. I'm talking about maybe 3, 4, 5 years ago. And so because it didn't, and over the long run, it didn't really matter what the economy was doing. It mattered for the short term, but in the long term, it didn't, right? So that could be an example of if you used a bottom-up approach on Tesla, right? I would say now you have to factor in top-down because Tesla is so big, and the economy matters a whole lot more to Tesla now than it did 5, 6 years ago. 5, 6 years ago, they weren't selling many cars, or at least they weren't selling, what they're selling now. So back then it was just about what's this company doing now to get to this level, right? So the valuation was based on that. Now you're over here, and now you're a part of the global economy. And so it's a little bit different, but that's something that, at the end of the day, not to say that, Tesla doesn't have to do anything special. They have to it's still a company that's innovating, but now you have to put the macro, global economy on as another layer when it comes to evaluating companies like that.
That's right. Absolutely. And speaking of Tesla, I want to get your opinion on this. Is Tesla a car company or a data collecting company?
Currently I don't own Tesla in the portfolio, but it is. It almost looks like they are using the Apple model, where you get the phone, but at the same time you're getting all the services and paying for this, paying for that. So I do believe they are going to that route where it is collecting data, and you got this halo effect now. It's the car, it's the charging station, it's the software, it's everything now, right? So I think the model, it's not just a car company.
That's
right. But it is a car company, but it has that halo effect right now.
There's a bigger picture.
There's a bigger picture.
Yeah, absolutely. So Nadeem, for the younger folks that wanna do what you're doing today, can you share your advice, and how would they take that road to what you're doing, and what's the best approach in terms of, what to study in school, and what road to take? And again, this is all in your opinion.
Yeah.
What's the best way to get to where you are today?
Yeah, I mean, I think, as you say, there are different roads that can lead to the same path. But I think what's important is, you have to be focused, right? And you have to be hungry. I think that's the other part. I think, well, I don't mean to sound like an old man, right? But I think today's generation, they are somewhat lacking the hunger, right? To maybe work hard and have that in you. So that's number one, is that I think that's important. But in terms of academics and whatever, the other thing before I get to that is that I don't like, there are going to be peaks and valleys in your career. And I've had my share of ups and downs, right? It's hard to sometimes stay motivated, but I think you have to stay motivated. And, my story was I told you the boiler room part. What I didn't tell you at that time was that, back then my dad was telling me, he goes, listen, you should do the CFA. And the CFA, if nobody knows, it's like the gold standard designation in our industry. Mm-hmm. And I would encourage anybody in finance who is looking to do what I do, right, to, go for the CFA, right? But anyways, my dad at that time was like, you should do it. Me, I was maybe, having a little too much fun, didn't really care about it, wasn't focused, whatever. I didn't do it. And then, what happens is that you come to a point much later in my career, I had a setback. And when I had that setback, I was like, shit, I should have listened to my dad. Yeah. The CFA could have helped me out right now. And I just felt, I can't have any regrets. Like, I can't have this regret in my life, right? And so I was 40 years old, yeah. No, I was close to 40 because I had 3 kids at that time, and I didn't have my son, and I enrolled back into the CFA. I actually took the test, I failed it, and I just let it sit there for the next 12 years, right? And then at that age, I was like, okay, you know what, let's do this, right? So, of course, my wife was a big support. My family was a big support because at the end of the day, it's one of the hardest exams in the world. And for me at that time, if you can imagine, I had 3.5 kids, right? And I was at a role at RBC, which was 100% commission. And sometimes, the whole, the two combination, it was extremely stressful. But you know what? And you're studying for what is one of the hardest exams in the world. So yes, to get to back to my point, how do I, what advice do I have for young people is that number one, be hungry, be focused, have that mindset. Setbacks are going to happen. It's not about, falling. It's about getting back up.
That's right.
And it's that whole Michael Jordan, saying where he's missed, how many shots in his life, but this is why, he gets the ball in his hands for the game-winning shot, right? So I think, that's really what it is. But in terms of, I would obviously encourage, now these days, I think a lot of things have changed. Academically, sure, if you're in the school system, you might want to major in finance, even mathematics, believe it or not. If you're majoring in mathematics, it's one of those subjects that is valued on Wall Street and Bay Street. Of course, with AI, things are starting to change.
That's right.
But yeah, I would say focus on that, and just have a passion for, like, there's so much resources now, right? Like, you can go online and I would say, subscribe to some of the journals, keep up to date with what's going on out in the market. And,
Good.
Yeah.
Awesome. So, and one thing to add to that is grab yourself a mentor. A mentor, just like Nadeem, goes a long way with, teaching you the ways and sharing that, insightful experience with you. So, you don't have to go through the, make the same mistakes as the older people and the more experienced people have made.
Yeah. Actually, I spoke to a few kids like that, and they asked me about should I do my CFA? I go, listen, man, don't make the same mistake I made. right? Just do it and get it out of the way.
Yeah.
So, yeah.
Especially if you're going to use it, right? I wanted to thank you again for spending time with us today. Before we do wrap this up, I want you to share with the audience how can they get a hold of you if they want to reach out and ask you questions or partake in your investment portfolio.
Sure, absolutely. So you can definitely send me a quick email. My email address is Nadeem, NADEEM at Sharia-portfolio.ca. You can definitely follow me on social media. We can add my
Yes, and I'll definitely add that notes.
and I'll also include my phone number there as well. The website for our firm, if you ever wanted to just book a consultation with myself, just go to Sharia-portfolio.ca. We have a tab there. You can book an hour session with me in terms of consultation. And, I would say this, although we do target Muslims, like I said, the Sharia style of investing is up from the S&P by 1.6% per
That's
annum.
right, yeah.
So I think anybody of any faith would take, that number over the S&P. So, we welcome all investors.
It's all about the value that you get at the end of the day.
Exactly. Absolutely.
Amazing. Thank you so much, Nadim. I greatly appreciate your time again. And hopefully we'll see you guys on the next podcast. Take care, everyone.